Tenants can add record rental prices now to their cost of living woes, with rents rising by an average of 15% across the country. New data this weekend shows that Queensland has been hit the hardest, with rents going up by as much as 30% on the Gold Coast. Let's bring in founder for InvestorKit, Arjun Paliwal, for more. Good morning to you, Arjun.
Good morning.
30%, that's a huge rise on the Gold Coast. How does the rest of the country look?
Yeah, it's actually not a pretty story. We've seen rises from 10 all the way up to 30%. Some of the lowest markets are in that 5 to 7%, which just shows how strong the rents are rising.
Now, you said you were here on the show about 6 months ago talking about the rental crisis, and it's now even worse than you predicted it might be back then. If you look into your crystal ball now, what do you see happening over the next few months?
Well, firstly, vacancy rates haven't been this low since 2006 April, which is actually quite catastrophic on the rental markets. Our expectation is not just a few months, but actually 1 to 3 years ahead this could go on for, until some serious changes are made.
Is this because, our borders were closed for 2 years during the pandemic, so there were people from overseas weren't allowed to move here, they weren't looking for homes. Now more people are allowed to come into the country. Is that one of the things that's pushing up rents?
That is one of the things that will add to the future pressure, but the largest reasons have actually been due to investor inactivity for many years. There's been a lot of anti-investor sentiment, whether it be from banks, whether it be from government bodies, and the finance take-up of investors reducing has actually caused a lower rental pool over the last few years. So that is a big part of why rents are actually rising.
You say anti-investor sentiment. Is that sort of more designed to get people into their own homes?
It does have a small effect on the positive note when homeowners are incentivised to begin with, but actually shrinks the rental pool the more and more that balance is not quite clear. Going back to 2015 and 17, APRA obviously played a big couple of changes, and that massively reduced investor finance take-up.
So what is the solution then? Because a lot of people would say, well, if you make it easier for people to buy investment properties, that's going to make it harder for people to buy their first homes. Exactly.
It's about finding a good balance. And the biggest solution, I think, starts with the banks. Right now, banks very much treat investors extremely differently, from interest-only loans being more expensive, from actually making it harder for an investor to get a loan, and all these things add up. Now, from a government level, we also see more taxes, more costs, and more regulations. The more harder you make it for participation, especially since social housing has actually been a reducing trend, it increases more difficulty for investors, which reduces the pool of properties for rent.
Are rents going up everywhere, or are there some areas that are bucking the trend or not going up as high as others?
Well, firstly, 75% of areas across the country in our calculations have vacancy rates of 1% or below, which is considered a crisis. Yeah. There are areas with less dramatic rises, Mildura, Rockhampton, a few areas just there, and even Melbourne, largely because there was a little bit more supply. But our expectations are that those cities also see fast rising rents over the next year or two, which isn't good times on the rental market.
And is this just houses or just apartments, or is it across the board?
It started off just houses, as rental supply in the units was quite available. But because we're now seeing migration return and migrants typically rent for their first 4 years coming in, I do actually envision the unit market becoming quite tough to find available property soon.
All right, well, if you are then somebody who's looking for a rental property, what can you do? Because I imagine people going to look for rental properties are finding that there's dozens of other people all lined up for the same place. What can you do to make yourself stand out?
Well, firstly, be extremely application ready. I know sometimes you can feel like I'll just go out on the weekend, have a look, go for it, but you need to be as ready as possible to stand out. Other things are that first impressions do matter. And lastly, some extra tips could be around how could you maybe offer a 2-year lease to look a little bit more attractive, and that way you don't have as many frequency of rental increases.
Are people still offering more than the advertised price to try and get the spot?
That's actually quite common, so it's happening a lot. And lastly, we're also seeing that renewals are actually at far greater rates than your typical $5 to $10. So those tenants would be advised to look into that, because if they don't, they might be competing on the market again.
I'd say it's a great time to be a landlord, but then they're facing rising interest rates as well, so it's like nobody wins in this scenario. Arjun, thank you very much for your time.
Thank you so much.
Over to you, Charlie.